Hi, let's cover my Elliott Wave scenarios on Bitcoin. And this is going to be a short video as the probabilities of the different scenarios depend on this white box. Now, let me explain where we left off yesterday. Yesterday, we were looking for price to curve towards the upside. We had some areas of support down here, and we wanted to see price move towards the upside and preferably reach the box. One day later here, price touched support, moved to the upside and touched this white box, which is an important one because if I open all of my levels, then you can see that above this box over here, there is not a lot going on. And of course, I can take a volume profile of this range here, and I can have a value area low at 111.6, point of control at 113.5. But those are not necessarily very significant levels. I'll keep them in mind. But when I look at the horizontals that I check in the morning, like the time frame horizontals or significant volume levels, then this is quite an empty space. So if price can move above this resistance here, the probabilities increase for price to take out the high. If it can also move through those smaller volume levels here, the ones I just put on my chart, value area low, the little point of control, at least the probabilities increase to take the high. But if it does, then the probabilities increase to reach the daily at 115, which is maybe not necessarily a very significant level at the moment, but it is on my chart, so one to check. But if you move beyond the daily, then besides a bit of a double top, there's not a lot going on in this space here. At the moment, you're going to move inside this gap, probabilities increase to just move to 121k, and that is important because it like impacts the probabilities of the different Elliott Wave scenarios. So what we were looking for yesterday on the lower time frames has played out, and now it depends on this structure to the upside what's going to follow. If this move to the upside is going to be corrective, right? So you're not going to be able to move beyond the resistance. You're not going to take out this high. If this move up is a higher probability corrective structure and rejects, you're going to be looking at the following scenarios: 5, 3, 5, 3, 5. An impulse to the downside, 1, 2, 3, 4, 5, to basically look to finish a larger impulse down from the all-time high. A 1, 2, 3, 4, 5 wave structure. Find support in this area here. Preferably, we still have some support later as well. And then after you finish your fifth wave here, you're looking at one of these three structures to move back towards the upside. These are motive wave structures. This is really what you want to see if you are a bull at that stage, because the bears can also get a 5 down, but then a 3-wave move towards the upside, a corrective structure, not to take out the high that is then made here, and then you're looking for price to continue towards the downside, and that would increase the probabilities for bearish outcomes. Now, another scenario you got to keep in mind here, if we get a corrective move to the upside here, is a larger sideways corrective structure. So a W, a wave X, and then you get a wave Y being a triangle or a flat structure, but the result of these two scenarios is the same. You're eventually looking for price to move down, take out the low. Finally, if this is a corrective move up, you have a flat, wave A, wave B, wave C. But guess what? The bias is the same in all of these scenarios. Here, you look for price to take the low. Here, you look for price to take the low. And in a flat structure, your minimum target is 104.5k, which is just above the low, but you're at least moving very close towards the low. And commonly, a flat wave B does take out the low of its wave A before then getting a C to the upside. So this would be a 3-wave structure, not a 5-wave structure like you want to see with the impulse. This would be a 3-wave ABC, where your B is then a corrective structure. So you can see that a corrective move up increases the probabilities for price to reject and then take out the low. If price can move beyond this area of resistance and move to the upside, preferably take out 114 after, then we have to be aware of the following scenarios. The most bullish one being a multi 1-2, and I removed the expanding diagonal from my chart. It's rare by definition, and multi 1-2s are more common than diagonals anyway, so I was like, you know what, let's just change to a multi 1-2, 1-2, 1-2, and then a move towards the upside. As ugly as the multi 1-2 is, we got to be aware. You then have a flat structure in a second wave 2, which preferably is finished here, and this becomes an impulsive move towards the upside, or at least a motive wave. So a diagonal, multi 1-2, or an impulse, which basically means move beyond the area of resistance, don't get rejected by the smaller volume levels here that I don't really have on my chart, but I am aware nonetheless, right? Just in case, you got to be aware a little bit. And then move beyond 114, which should then be a 3 to the upside. At least that is preferred. You get 1, 2, 1, 2, and then eventually a larger 3 towards the upside. You don't want the corrective move up here, because you don't want this wave 2 to be a lot longer and get like a W, X, and a Y, a sideways structure, as then this wave 2, which is a lower degree wave 2, is significantly longer than the higher degree 2. That's not what we like to see. Invalidation is clear. Now, if this becomes, of course, if price rejects here, you get a corrective move towards the upside. That's a problem for this scenario. That basically means that the bulls have one option left, which is the expanding diagonal, 1, 2, 3, 4, 5, get a larger corrective structure and then move up afterwards. But again, by definition, Elliott Wave Theory, expanding structures are very rare. They're not preferred unless all the other stuff starts failing. So we'll have to then keep an eye on the new local price section that we get printed on the chart. At least we are aware. We just can't really give it the highest probabilities. So a multi-1-2, got to be aware of it. The other scenario is a bearish scenario, which is a WXY double zigzag. ABC, W, ABC, that's your wave X then, if preferably finished. And then you get a 5, 3, and a 5 double zigzag wave Y. Wave X preferably doesn't move to the 0.7 Fibonacci, taken from the start to the end of wave W, which at the moment it hasn't. But then you need a 5 wave up here, or a motive wave, diagonal, impulse, or at least a local 1-2 to get eventually an impulse to the upside, to get another wave A, get a wave B, and then a wave C for a larger W, X, and a wave Y, double zigzag to the upside. So the direction is the same as the bullish scenario with the multi-1-2s. You just need a 5 up. If this is a 3-wave corrective structure, then this wave X becomes a larger corrective move, which is possible for this wave X in a WXY. So if you do get a larger corrective structure here, right, the probabilities for the bullish scenario, being the multi-1-2, will decrease significantly. The bullish scenario then switches basically to an expanding diagonal, which by definition is rare, which means your quote-unquote bullish scenario basically kind of like becomes a double zigzag, as long as preferably you don't touch the 0.7 at 106K. But this is by itself still a 3-wave corrective structure, and after a while you go down. Aware. So you can see that this move to the upside now that we were looking for yesterday, which played out perfectly, is currently really important. The resistance is very important. It really influences the probabilities for the different scenarios. Now, I shortly want to show you the levels that I have on my chart in case you like to copy them. These are the volume levels that I have. These are the time frame horizontal levels. These are the order blocks, and currently we are here at an order block, which internally has a daily level as well. And if we then look at the probabilities and we just look at the local price section, it's quite simple. If price can pass this resistance, there's not too much going on here besides these small little volume levels. You can check with the volume profile, you can observe them. They're not really significant levels that I have on my chart. So the probabilities naturally increase. If you pass this box over here, they naturally increase to take out 114, which therefore means the probabilities increase for a multi-1-2 or a double zigzag. So you're looking for either a 3, or you get a wave A, you get a wave B, you get a wave C. Direction is the same. If this resistance holds, we start moving down and eventually changing structure again, right? As long as this holds, we got to be aware of a corrective structure to the upside here, and then price to take out this low. And then the move towards the downside can be an impulse, 1, 2, 3, 4, 5. After wave 5, we look for price to move back up. Can be a flat A, B, C, where wave B is a 3-wave structure, and then you move up. Or you're looking for a larger W, wave X, and a wave Y, after which you go down and take out this low. Right? And your bullish scenario would be this one with a larger wave X. So at the moment, right, the great opportunity that we had was yesterday. This was a great opportunity, high probability opportunity for a move towards the upside, as explained yesterday at the end of the video. talking about the 50-minute time frame. That was great. Now we touched an area of resistance here, which was on my chart yesterday as well, and we are aware of the importance of this area of resistance and how it influences the probabilities of the different Elliott Wave scenarios that we have going on. Now, of course, I have, if I zoom out, still the bullish scenario on my chart, right? ABC is a flat structure. Wave C target area is this whole blue box. You can see there's still a lot of space. The low of A at 107.2 to 95.5. This wave C over here on the Coinbase charts would preferably be a bigger structure, just because you avoid truncations and you avoid counting this as a single two. So we are aware of this scenario. But we're also aware of just this move up and how it plays with probabilities. This move up, kind of like the size going down, if it's corrective and the resistance holds here, we're looking for price to, probabilities are higher to just take out the low. We can do that in a 5-wave structure. We can do that after a larger sideways move and then move down. We can do that in a flat A, B, and a C. We'll see. But the directional bias is the same. If this move up can pass resistance, looking for multi-1-2 for the bulls, looking for a WXY for still bears, but it's a move towards the upside nonetheless, right? So we are aware. But that is the importance of the local structure. That's basically everything I wanted to talk about in this video. It's just waiting for price to show a bit of clarity locally. It also shows you when are opportunities there, when are they not really there. Yesterday there was a great opportunity for a move towards the upside. Now we hit resistance. We haven't yet changed the structure locally as well. It's too early to look for CVD divergences if there's absorption of longs or shorts. Just let price do its thing a little bit and then eventually adjust from there. We'll see what we have tomorrow. And tomorrow we also have some high impact news that is more interesting than whatever is going on today. So we will see, but at least we are aware of the scenarios and how the local price action influences the probabilities of the different scenarios that we have. And we were aware of the opportunity we had yesterday, which played out nicely. So that being said, hopefully this video is helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.